Hi, I'm Phil Grande at philsgang.com. We're hitting a new year, and you should, at the same time, come in with a new attitude, a new philosophy that you're going to make money when the stock market goes down. That's right. This is the third bubble, and you don't think it's going to crash? The first bubble did. The dot-com, the second bubble, the housing and financial con. Why do you think the third bubble, which is twice as big as the two previous bubbles, is any different? It's not different. Matter of fact, it's worse. It's going to go down faster. The stock market is going to go down 50%. You're going to lose 50% of the money you have in the stock market. You're going to lose 45% of the equity you have in your home. You're going to lose 30% of the money you have in your savings. Yes, you are. Trust me. Join my gang, Phil's gang, so that we can show you how to benefit, how to profit. But you can't just sit there and own a stock. You got to learn how to short the market. Join my gang. Learn how to short. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande of philsgang.com. I want to extend an invitation to 85 people. That's right. The first 85 people can come to my live shorting webinar. I'm going to hold it on February 13th, 1 to 3 p.m. It's only $70, and it's archived for 2 weeks in case you can't make it. Learn how to sell short. Sign up now for my live shorting webinar, February 13th. See you on the chart.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, my name is Phil Grande at philsgang.com. I'm going to tell you something about your 401k that you don't know. You know the 401k is a tax code? That's what it is. Here's how it worked. In the 80s, you had pension funds, but they decided to give their CEOs a benefit on top of the pension. It was called 401k. That was to shelter their income. That way they could keep the CEOs because it was very competitive. But when all the jobs were shipped overseas, they no longer could keep pension funds. Too expensive. So they shifted all their employees to a 401k, duping you, thinking it was a good deal. But what they did is they charged hidden fees, which amount to about $250 billion a day, that they gave to lobbyists to go to Washington to make sure that this 401k would never be transparent. Here's what came of it.
Responsibility begins and ends with our partners and our shareholders, and that's it.
That's right. So join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Be sure to watch the Phil's Gang Show with Phil Grande, weekdays at 3 p.m. Eastern Standard Time on various devices like smartphones, tablets, your computer, and more. Get free access to the Phil's Gang Show right in your hands at home or on the go. Simply go to philsgang.com. That's philsgang.com and click on the Listen Live link. And we'll see you on the charts.
Hi, I'm Phil Grande at philsgang.com. Do you ever notice they always tell you to buy, but they never tell you to sell? They never tell you to sell. Well, I'm going to help you. I'm going to help you understand. When you buy a stock, and if all you do is buy, and you never sell short to make money where they're going down, you have to be so good. That means you got to buy the companies that are always going up. Nobody's that good. Nobody could possibly be that good. You got to make money just like you make money when you buy a stock. You got to make money when a stock goes down. That's how you even the playing field. That's how professionals make money. They make money going up and make money going down. But they don't tell you that. They just want you to try to make money going up. They don't want you to make money going down because they make that money on you. Join my gang, Phil's Gang. Learn how to short stocks at philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
AMBA, and I've lost over 30K on it, but it had excellent earnings the last several quarters, and if they make the cameras and drone equipment, I don't know why it's so weak these days.
It's so weak these days because you don't pay attention to what they make. You don't care about their earnings. The problem is the institutions are pulling their money out, and that's all you need to know, and that's what we identify in the chart, and that's why I become a Phil's Gang member.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, my name is Phil Grande at philsgang.com. You know we're going to have not only a stock market crash in 2016, but a housing crash in 2016. Don't you like how they tell us the housing's in recovery, and the market's in recovery, and the economy's in recovery, when it's not. It's in a bubble. Take housing. They loaned to a Wall Street firm called Blackstone. $7 billion. They buy 41,000 houses to go rent. Are you nuts? When they can't collect the rents anymore, Those houses are going on the market and going to depress the real estate business by 30 or 40%. It's the same thing with stocks. They loan people money 600% more than they ever did before to buy stocks. That's all debt. And when the market goes down, they're going to have to dump those stocks to pay back that debt. And boy, will the market drop. Join my gang. Learn how to short. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. There is only one talk show host, Phil Grande, who delivers both social and financial talk. Not even Hannity or Rush can deliver a 1-2 punch like that. That's Phil Grande, philsgang.com. Phil Grande is unique, the industry leader, the first talk show host ever to combine social issues and finance into winning stock market ideas. That's Phil Grande, philsgang.com. That's philsgang.com. The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
Strength of the dollar is certainly something we take account of in deciding on monetary policy. I agree with you. Net exports have declined. It's been a drag on the economy, and for that reason does factor into our thinking. It's one of the reasons we think that the so-called neutral level of the Fed funds rate is low at the moment. But remember that in spite of that drag, and the impact it's having on manufacturing, the economy has continued to create jobs at a pace of 220,000 or more a month.
Oh, my God. I get a headache listening to her. That's Aunt B yelling, talking to Congress today, lying to Congress today. But the people at Congress are too dumb to even know what she's talking about. They don't get it. It's amazing. They're stupid. They don't counter her. 225,000 jobs, she says. What are you, nuts? Not one said, well, what kind of jobs are they, ma'am? Not one. It's unbelievable. Oh, God. Welcome to Phil's Gang. Coast to coast around the country, off the Wall Street Radio Network. The market hit a critical area today on the S&P, 1810. It's right there, still there. They've been trying to keep it up. The Federal Reserve been trying to hold the market up, put a steel-eyed beam in there, make sure it doesn't drop. But it will. And this is the most critical area we've seen. And so if it breaks through this 1810 area, then this market goes down another 20%. Easy. So we're going to keep our eyes on it. The market's already down 14% since the time I told my gang to short the market. I'm now telling you that the last week of July, I've never seen such a big sell-off in stocks, such a big dump of stocks by institutions. I've never seen it this big. That is an official warning. The market crash has begun. You don't have to believe it, but that's exactly what it means. The market began to crash this last week of July. Remember that. Remember that. I said that was in July, and the market started to crash. We have a 14% return, shorting the market. And right now, it's at its most critical area. As I said, 1810. If we break through there, we go down another 20%. And that's the beautiful thing. That's on the S&P 500. That's the most beautiful thing. That's why it's so important to learn how to short stocks. It's got to be part of your portfolio. It's got to be. Until we get our jobs back, if we ever get them back, till we get the high-paying jobs back, the manufacturing jobs back, we have to continue the Federal Reserve will have to continue creating these artificial bubbles. Because if people are making $28,000 a year, think about it. And think what she's saying about jobs here. Instead of making $50,000, you make $28,000. How are they going to go out and buy stuff? How are companies going to accelerate their earnings? If you're not buying stuff, they can't. So what they have to do is start these artificial stock market rallies. As I explained to my gang this morning, like the housing market, they have to use an asset, a financial asset, to mask what they're really trying to do. So they said, let's help people with housing. We talked about this yesterday. That's not the purpose. The real purpose is to create a fake stock market, because stocks can't go up if people are making $28,000 a year. And if you can say, well, the median income is $50,000 a year, Phil. Well, no. Why don't you deduct from that your tuition? Just deduct your tuition, what you're paying for tuition. Deduct what you're paying for rent. That's almost 35% of your gross. You're down to $28,000. So you don't have money to go out and do the things that most people do the purchasing. So you don't have the purchasing. Company stocks don't go up. You got to purchase. It's called top line sales. From top line sales, you get earnings. If you don't get earnings, your stock price don't go up. So they have to create fake stock markets. There's no choice. And that's how they do it. But to come out and say, hey, we are going to go ahead and create a stock market for the 5 percentile. Remember, a very small segment of the population makes money in the stock market. That's the 5 percentile. They're the very wealthy. All their money is in the stock market. So they got to make money. They're the ones who control the Federal Reserve. They're the banksters. They're our owners. The 5 percentile control Congress. They control everything. So they're going to control to make sure the stock market's going up. So they're going to say, okay, if we don't have a good paying jobs, you think I'm going to sit back here and not make money in the stock market? We'll create a stock market, but we'll fool everybody. And we'll take an asset, financial asset like a house, and we'll say we're going to help everybody with housing, when in fact we're really helping to artificially put the stock market up. But the problem that you have with that is at some point the stock market will crash. There's no question. Because stock markets, there's a lot of depreciation in stock markets. Stock markets go up, they start pulling back. And then you got to print money, print more money, and shove that money in, push it back up, because there's no earnings. And then it depreciates again. Market comes back, you got to print more money, shove it back in. In the meantime, the asset that is masking what you're doing keeps going up, but all of a sudden the asset stops going up, like housing. When gasoline went up, housing stopped going up, and depreciation hits that asset. When it hits that asset, that's when you get the deflation. That's when jobs start going down. That's when it starts crashing, and that's what crashes the artificial stock market. It did it in the dot-com, it did it in the housing com, and it just is doing it right now in the QE com, and I told you starting in July, it started. Now, going back to her 2025 jobs, what a lie that is. Like, it's great. Are you kidding? Look, let's take October. Take the 271,000 new jobs. Only 20,000 went to the important 25 to 45-year-old. That's where you start. That's the most important age. Right before you start retiring, you got to start accumulating. You got to accumulate wealth. But only 20,000 jobs went to that important group. Can you believe that? That's crazy. 20,000 out of 271,000? That's nuts. So almost half of the 271,000 jobs went to those 55, 60, 65. Well, wait a minute. Aren't they retiring? Well, they can't. Why? Because they have a 401k. Because a 401k, you only can buy stocks. You can't short stocks. 401k, you can't even do individual stocks. So the people that are retired, they can't retire. They have to come out of retirement and pick these jobs up. So the people that are 25 to 45, That's when you're supposed to start your earning, the most of your earning to put things to have a family, to start retirement. They don't get the job because you got to take the retiree guy. He comes out, or the guy who's ready to retire. He's got to keep working. So she's crazy what she's saying. And all these jobs are low-paying jobs. 73% are low-paying part-time jobs in the jobs that came out in October. December, the same thing that happened in December. 292,000 jobs. Only 16,000 out of 292 went to the important 25 to 45-year-old. Guess what? 79.1% were all lousy, low-paying jobs. She's crazy.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil Grande.
Welcome back to the Phil's Gang Show. This segment is brought to you by Phil's Talking Trader Stock Charts.
And welcome back to Phil's Gang. Well, Yellen spoke today talking about how jobs are okay, everything's fine. Really? Really? Are you kidding? We have 2.3 million jobs at lower wages than we had when Obama first took office. We had 2.3 million more. How could that be good? It's crazy. You know, she just comes out today and she wanted to stop the stock market from collapsing. So what does she use? What do they always use? Negative rates. Remember the Friday that she came out in Japan, had negative rates in the stock market, went down just like it did today, and then rallied up 300 points because of negative rates. Japan decided to put them in. And I told you, they convinced Japan to put the negative rates in for one reason only, to rally the stock market off its lows. And it did. Didn't last. In fact, today, at our very low, at the critical 1802, that if we break through there, we'll go down at least another 10, 15, maybe even 20%. Most likely 20%. Now, we're off those lows, but we didn't rally 300%. We were at 375, down 375 points. Now we're down 265 points. Now, here's what she did. She knows she's never going to do a negative rate. But she knew she was talking in front of Congress. She said, this is the way I can stop the market from falling today. I'll get them to ask me the question, would I do negative rates? Listen to this.
Are you considering, if things go south, which none of us hope do, are you considering negative rates?
Wait a minute, things going south. Aren't we going south now? What is this guy, this politician? Where's he live? Not going south?
Are you considering, if things go south, which none of us hope do, are you considering negative rates? I know you had that question yesterday. Yes or no?
So the answer is that we had previously considered them and decided that they would not work well to foster accommodation back in 2010. In light of the experience of European countries and others that have gone to negative rates, we're taking a look at them again.
So listen to what she's saying. In 2010, she says, we're not going to do negative rates. Now, let me first explain what a negative rate does. The spiel, the nonsense they spiel out, what they try to, the theory or the illusion they create, I should say, the illusion they create is this negative interest rates, that once you implement these things, it's going to encourage a bank to lend to consumers rather than the bank hold the money back. And then consumers are going to spend rather than save. So the idea is negative rates, the bank's going to lend instead of hoard the money, and the consumers, instead of save, are going to spend. It doesn't work. It doesn't work. So low rates are supposed to drive lending, which drives consumption by individuals. But it's not happening. Japan is not happening. They've had ultra low rates for years. The economy's fallen off a cliff. Europe did the same thing. They have negative interest rates. The economy sucks. Terrible. Denmark, Sweden, Switzerland all have negative interest rates. Consumer spending isn't up. In fact, saving rates have been going lockstep with a decrease in interest rates. Exactly the opposite of what these geniuses at the central banks here and around Europe expected would happen. So lower interest rates have wrecked economies. It's because it wrecks retirement plans. Say you were doing some financial planning 10 years ago and you plugged in 3% return. You're figuring out, I'm going to retire, I got to do this, that, and I'm going to get a 3% return in a savings account. Now it's 0%. You still have to plan for your retirement. So you plug in 0. What happens to your planning now that you're at 0? What happens? compounded over 10 years, 20 years. It's zero. The math doesn't work. It doesn't work. It doesn't work for the banks because what happens, the banks, the margins become negative, and they're not going to loan anyways. If they're loaning, they stop loaning. It's used for one reason. It's a ploy to get the stock market to rally. It's the last trick they have in their bag. The stimulus didn't work. Zero interest rates didn't work. QE didn't work. That's what happened here in the United States. So today, the market is collapsing today, and it hits this critical point and still sitting there. Now remember, when they brought these out, the negative rates into Japan, and now going to negative rates. That was a couple of Fridays ago. Remember, we went up 300 points at the end of the day. We're not going anywhere. This market. It's not the market that's in trouble. We don't have jobs. You know, what is it they don't get? It's the job problem. Yellen continues with the narrative the economy is doing fine, even though personal bankruptcy filings in this country are up 35%. Why? Increasing debt, student loans, auto debt. And the auto debt's terrible. Living costs are going up through the roof. Healthcare costs up 40%. And you have lost income from wage deduction, where everybody, especially with healthcare, Obamacare is going from full-time to part-time, and there's no more overtime. There's the cause right there. That's the cause. Not doing we'll fix that with negative rates. That's why I've explained to you. When you don't have people making money, they don't go spend. So they have to create a fake stock market because the 5 percentile, all their wealth is in the stock market. So they got to make the market go up. And because they control the central banks, they control Congress, they control everybody, so they can make the market go up. But you think they're going to tell you they're doing that? No. They'll say, oh, we're going to help you poor people with a house. We're all going to give you a house. Unbelievable. We'll be right back right after this break. 28 past the hour.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil Grande.
Welcome back to Phil's Gang Radio Show. For more information, simply go to philsgang.com. Now, here's Phil.
Stock Corner is brought to you by the Phil's Gang video channel. Go to philsgang.com, click on the video channel graphic, and check out Phil's free videos on the market, economy, and current events.
And welcome back to Phil's Gang. The stock market is a great place to be. You can create wealth as long as you know what you're doing. History shows the stock market goes up 70% of the time. 70%. But here's what you don't get. We have a bunch of gangsters that control the market, called the Federal Reserve. The Federal Reserve. They control 85% of the stock market. So it's financially engineered to the upside. Now, it's financially engineered to the upside because, remember, and here's the other thing, 85% of the stock gains result from overall market moves rather than the internal company fundamentals. So you can't go with the fundamentals. Let me say this again. 85% of gains, all the gains result from overall market movements, not the internal company fundamentals. Now, I told you that these stock markets are created because they have to, because we don't have good jobs. Therefore, there's not enough money to go out and buy stuff, to move up the earnings, to move up the stocks. And the 5th percentile are owners who control our Congress, our country, who own us. Their wealth is in the market. They'll continue to create these bubbles. We're in our 3rd bubble. And the bubble always pops. It always breaks because alongside the stock market is the asset that they're pumping, like housing. Remember I told you, do you really think they believed that the housing market was safe and secure? When the stock market was going up over 80% and they were making money, do you really think, and remember, the only way they got the stock market to go up 80% during the housing market, you had to have the housing market, because you have to have an excuse to print money for the housing market, and then you print extra money for the stock market. Do you think people would be happy if the 5th percentile came out and said, we, the 5th percentile, we're going to move the stock market up now 80%? Here, watch us do it. No. So what they do is they put in the housing to mask it. Now listen to this. They knew it was never going to work. Here's Como. And this is when they asked, wait, what are we doing these subprime loans? Listen to this.
For $2.1 billion that would not have been available to families of low and moderate income, low and moderate income families across the country. About 15,000 families we estimate will get mortgages who would not have gotten mortgages otherwise.
So this is when it first started, the very first subprime loan started. And he admits these people would never get mortgages because they shouldn't get a mortgage because they can't make the payments. Now, so would anybody do that unless there was something else going on? Of course not. What's going on is the creation of the stock market. So that housing, it wasn't a housing bubble, it was a debt bubble for the purpose of creating the stock market to mask what they're really doing. Now, every bubble that you rally, whether it's housing or tech or right now the QE, it always blows up because at some point you got to pay the debt back. The debt, you can't go up anyway. At some point, you got to pay the debt. Your credit card, you got to pay the debt back. And then it collapses if they don't pay the debt. And that's what happened with housing. It collapsed. They knew it was going to collapse. That's what happens to the stock market. It collapsed. But the smart guys who made all their money on the way up, they're turning around and they're going to make their money on the way down. That's why you can't make money because you're not part of that group. You're told to stay in and hold. You're fine. On the way down, you don't get it. You don't get that downside. Well, I'm going to change that. I'm going to invite 85 people this Saturday between 1 and 3 Eastern Time. It's going to be archived for 2 weeks. I'm going to introduce you to the best shorting program for 2 straight hours, and you'll get it. See, I get what he means now. I understand what he's saying. No wonder they do these stock markets. They're all fake. But do you really think if the 5th percentile, the 1st percentile came up and said we're just going to run a stock market and there was no asset next to it to mask it, the housing or the tech, or here, the one we're in right now, remember what they masked it with? Hey, we're going to create all kinds of great jobs and grow a great economy, 4 or 5%. Doesn't work. So now what's happening? Everything they did is blowing up. Auto sales blowing up. Student loans blowing up. That's at the peak. When they blow up and prices deflate, then the stock market blows up. Now think about this for a moment. We shorted Ford and GM. What has been the big asset play? Autos. They took, remember what they did with this QE? They took the housing market, when that blew up, they said, look, let's take the housing asset and we'll exchange it for the auto asset so people won't know we're driving the stock market up. We'll get everybody in a car. Everybody. Isn't that what they're doing? Everybody get a car. It's unbelievable what's going on. So you have anybody can get a car. It's crazy. It's crazy. Look, households are borrowing $12.1 trillion. $12.1 trillion. Most in 5 years. Consumers are struggling. Why? Due to loss of income. Because we have 2.3 million fewer high-paying full-time jobs right now than when Obama took office, 2009. Now, as a result, there's $12 trillion in consumer debt, not counting the subprime auto loans. Now, remember what they are. You define them as consumers with credit scores on average below 575. The percentage of auto loans to buyers with the poorest credit ratings is growing faster than the rest of the auto finance market. Those delinquencies are 60 days or more, and they're surging. Auto sales are at a record high, and stock prices like Ford and GM are falling. So what did I tell my gang? Understanding shorting, understand how this market's going to collapse, has no choice but to collapse because it's artificial. And remember, it's always, all you hear is auto. In my town, you drive by every auto dealer building $1 million buildings. So Ford, I said to my gang, let's short it. And guess what? Ford's down 24% because we knew how to short it. General Motors down 22% because we knew how to short it, because we know the game. We know what's going on. So here we have auto sales are at a record high, but we have consumer debt at a record high. Isn't it crazy? And the percentage of auto loans, as I said, to these buyers with the poorest credit rate is growing faster than the rest of the auto finance market. So auto sales at a record high. Stock prices like Ford and GM are falling because credit scores to buy a car are at the record low. So let's think about that. We have record auto sales, but we have record low credit scores to buy a car. And as a result of this easy credit, subprime loans, they've surged, these subprime loans, from $700 billion in 2009 to $1 trillion today. Subprime auto lenders like TMX Finance, their auto loans went up 617% in 4 years, with the average interest rate on an auto loan 22%, while food stamps have doubled, and so have disability checks. Auto loans have surged, and think about this. The auto loans have surged. Automakers and dealers keep cutting credit scores to keep surging up the amount of sales. They keep cutting credit score requirements to meet what? The drop in median household net worth, which has dropped 24%. As far as the median household net worth drops, they keep on dropping the credit score to meet it. And the wages are dropping. Are you kidding? And you don't want to know how to short? We only have 18 slots left. Only 18 slots. Make sure you get it before they're filled. Go to my site, or you can call right now. Go to philsgang.com. 18 slots, and it's filled.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil Grande.
Welcome back to Phil's Gang Radio Show. For more information, simply go to philsgang.com. Now, here's Phil.
If I might, I'd like to distinguish between a systematic approach to monetary policy, which I believe we have put in place, and a system that we use that's in line with what other advanced central banks do, and a mechanical, mathematical, rule-based approach, which I don't support, and no central bank that I'm aware of follows. We have articulated in a clear statement what our objectives are: 2% inflation and our interpretation of maximum employment.
First of all, 2% inflation, she's crazy. Look, she says her mandate is maximum employment. It's just the opposite. She's doing the opposite. She's not creating maximum employment. We got more part-time jobs than ever. She's just crazy. This one just lies to you. So what do we have going? As I told you, and you heard what Kumo said. He said, we're going to give all these houses to people, even though they can't afford them. Because the real thing was to use that to run the stock market. Now we're running the stock market, and what are we using to mask it? Auto loans and student loans. That is the underpinning of this economy. And the lie was, we're going to, with quantitative easing, we're going to take and really create a great economy and a great many jobs. Didn't happen. So she's saying things are fine. Well, wait a minute. Here's the real problem. The economy is not going to get better until we get better jobs. We have things are changing. The demographics are changing. We're not just seeing the working poor filing for bankruptcy, but hardworking middle-class Americans. And they work at higher wage industries, like accounting and legal work. They just shed 3.6 million jobs. You know how many they added back? The recession shedded 3.6 million jobs. They only added back 1.6 million positions. But the lower wage industries, like the fast food industry, lost 2 million jobs. And you know how many they added back after the recession? 4.8 million. They doubled them. There's our problem. So how can you have a stock market go up 20 or 200%? Please explain that to me. When you have the lowest wage industry lose 2 million jobs and they bring back 4.8 million. But you take the middle class, they lose 3.6 million and they bring back 1.6. You can't do it. So the idea is they're always creating a fake market, a fake stock market, which you can enjoy and you can create wealth just like the 5 percentile. But what you've got to understand, it's not a buy and hold market anymore. Those days are gone. When we shipped our jobs overseas and brought back $28,000 jobs, and we shipped $58,000 jobs overseas, and brought back $28,000 jobs, there's no more. We're going to buy and hold the stock. We're going to find undervalued companies, and we're going to change management, and we're going to hold these stocks for 10, 15 years. No, because now we have cycles, because we don't have good economies anymore. And that's why the 5 percentile are getting richer and richer, and you're getting poorer and poorer. And here's how they really get rich: when they short it on the backside. If anybody's going to make money, it's got to be in the stock market. It's that simple. So again, when you have low-wage jobs, you can't have a good, robust economy. You just can't. You can't. It just doesn't work. Just like housing. They lied to us about housing. They said housing was really coming back. Housing was really coming back.
So we are seeing a recovery, I would say, in housing.
There's no housing recovery. They propped the housing sector up. The banks, first of all, stopped foreclosing on the jumbo loan houses, the $800,000 million houses. They stopped foreclosing on those in 2012. And because they knew if they put them back up for sale and foreclosed on them, it would completely saturate the housing market. Home prices would have really gone even much lower. And the too big to fail banks would be in trouble. So what they said is, let's target the small guy, the 3.5% down guy. Let's give these smaller mortgages. And that's what they did. So they went and they said, let's open up all these FHA loans to everybody, 3.5% down. And the taxpayer will take the losses when they go down, not the banks. So Fannie and Freddie are taking buying these $159,000 mortgages. They're going to go down. We are going to have to back them. We're going to have to take them over. And those are the loans the banks targeted to foreclose. And then they sold all the houses to BlackRock and to other hedge funds for them to rent. And then when they bought all these massive 200,000 houses at a time, the price goes up. Of course they're going to go up. But there's not going to be any houses to buy, even though the price is up. Everybody's renting them. There's no houses left. So she'll come out and say, oh, look at this. We got a housing recovery. What a housing recovery we got going on. No, you don't. That's a fake housing recovery, like a fake stock market. So the Federal Reserve comes out and says, oh, we only have a 3.9% delinquency rate on these jumbo loans. No, they don't. 17%, 19% nationwide. Look, I can tell you right now that I can help you. I'm reaching out trying to help you. I got 18 slots left. It's for 2 straight hours. If you can't make it, don't worry. It's archived for 2 weeks. You can show your kids. You got time to go over it. If this is a time to learn how to make money when the market goes down, this is it. Every day I come on here, the market's down another 200, down another 300. And you're right back to where you were with the dot-com crash and the housing crash. And now here's the third one that I told you started in July. And we've been short ever since. Here, I'm not making this stuff up. Saturday, I'll show you. Not only did we have a Ford down 24%, GM 22%, Intel 20%, but don't forget all the other stocks that we have. Our 5 stocks. Schlumberger's down 23%, Goldman Sachs down 21%, IBM down 13%, Caterpillar's down 18%. These are stocks we watch all the time. And my gang learned to sell signal. Where they get in, it's up to them. Like I always tell you, I don't tell you that Ford we made 24%, every gang member made 24%. I targeted them. I show them. I train them. I'm their coach. I teach them. I say, here you go. See this on the chart? See this pattern? Institution money's coming out. It's going to start dropping. Sure enough, it drops. That's all you need to know. And after 2 hours with you, and I show you this really works, then you can make a decision. Say, is this going to change your life or not? Or are you just going to do the same old thing? Stay with stocks, with your broker, with your 401k. You only can buy, you can't short. They charge you 2%, which is half of your money. They take, if you at the end of the year, 20 years, 30 years, you're ready to retire, you got $1 million, half, 60%, more than half, 60% goes to fees. It doesn't make any sense, does it? So the key factor to understanding about the stock market today is not like your father's or grandfather's market, where you buy undervalued stocks and hold on for years. Because with the introduction of technology, everything's changed. Everything's changed. See, the market went from where the retail investor controlled the market for years and years, 120 years. They weren't competing with Wall Street. They weren't competing with the brokers. Now they compete. Because with technology now, they can take the stock market when the economy is terrible and run it. And what you think they're going to work on the economy? See, Obama got it right. He said, I'm going to change things. He knew as long as he could run a 200% stock market rally, and he covered it, masked it with, oh, we're going to help you with student loans. We're going to drop the interest rate, which is stupid. Why don't you lower the amount of entitlement you give these kids? Instead of these colleges, every time you raise how much of a loan you're going to give these kids, they raise the prices on college. That's stupid. Cut that back. But that's for another day. So my point is they don't care about the economy. At least Obama didn't care about it, because the worse the economy got, his 5 percentile, 1%, they're very happy. They're making a fortune in the market. And as far as Obama was concerned, more people are going to go on welfare, disability, and they're going to be Democratic voters. Just take a look at our friend Sanders. So look, tonight, or call right now, 877-600-GANG, 877-600-GANG. There's 18 slots left. That's it. And all I ask, if you do well, Just send a little money to St. Jude. That's all. So don't miss out on this. Invest in yourself $70. You don't have to be a gang member. And learn how the market really works, where you can make money when it goes down with no gimmicks. See you on the charts.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.